This conference will now be recorded.
Good evening, ladies and gentlemen. This is Cruise Trading Frank. It's approximately 9:13 p.m. Eastern Standard Time on March 8th, 2020. This is our weekend strategic webinar session that we do on Sunday evenings. Normally we start around 8:30. I decided to start at 9 today to sort of get a little more backup information on the dramatics that's happening in the Globex and the world markets right now. Anyone who's attending this session tonight is witnessing history, and we should certainly see that in the form of technical charts. We're going to put our 2 cents across, but at this time, the way the meltdown's going on, we are again, we can see some technical bottoms, which we have identified very, very accurately, as you all know. Other people who have been members here who are attending, and some others are going to be coming in. Eldon's the only one who's a free trial member who just signed in today, so he's listening to it for the first time. Or maybe you have heard some of my other video casts on YouTube. Certainly subscribe to that, because you get a lot to you'll find out a lot more about why we say that what we do tends to outpace what other people are doing. But the way we look at it here at Clueless Trading, oh, by the way, before I go any further, full disclosure, this is purely for financial education and not for any solicitation or advice. And one of the things that I've always told myself is my biggest competition is myself. It's not what somebody else is doing, what this other service is doing, what this guy is doing and that guy is doing. That's not my concern. My concern is to move up and work at 80 to 90% peak performance under all market conditions. All market conditions, bull, bear, volatility, complete madness that's going on right now. Under all conditions, I want to be at 80 to 90 peak performance. And it is something difficult to achieve, but hey, that's what my biggest competition is. My biggest competition isn't what some other people are doing. And I think all of you should follow that type of mantra, and I think that's how you really get to that point where you feel comfortable. And you don't have to make money every day, but you look at your weekly P&L and you say, man, I came out even, all right. I did fantastic, like we did fantastic overall. And you beat your chest and you say, okay, fine. And if you took a nice hit, you go review your mistakes. And a lot of the mistakes are forced upon you. Most of the mistakes are emotional. There's no question about it. But these type of markets will force you to make mistakes, or at least draw your P&L into the red for no fault of your own. So don't feel bad about it. Don't feel too bad about it. One of the things I always talk about, and I explain to people, is don't personalize your losses. Don't make this a personal game. I know it's very easy to say, it's very hard to do, but don't personalize your losses. Just because you had a loss on a particular trade, and for no fault of your own, and you're doing the right thing, well, 2 days, 3 days later, and we have seen this happen over and over and again on a reflex bounce, because all the markets are going to do right now is a reflex bounce till we get over certain levels where we can say, okay, we have a confirmation bias, and we'll be moving up from there on a consecutive multi-day basis. Right now, it's all about reflex bounces, which will last, as you have seen and we have made money on, 6 hours, 4 hours, 3 hours, maybe overnight. Okay, and I'll explain to you in simple terms the real fundamental reason why the futures are down, almost limit down 130 points. Dow futures are down 1,000, and Dow futures are down right now 1,050 points. Nasdaq futures are down 370 points. The Nikkei is down 5%. The DAX futures are down 4.5%. The FTSE is down. That's a UK market for somebody who doesn't know, 5%. The CAC 40, the French market, I don't really care about that, is down 5%. Then we have the Nikkei, Japanese market, very important, down 4.5%, was down 5% earlier. That's 900 points. The Hang Seng is down 2.2%, which ain't bad, actually. Wow, that's pretty good. China 8 shares, that's China listed companies in Hong Kong are down. The China 8 shares are down 484%. And the China A50, which is their largest 50 companies, insurance and banks and all that stuff, is if I'm correct, if I'm looking at this right, is only down 1.15%. Pretty damn good. Am I looking at this right? Hold on one second. And yeah, 1.2%. Not bad, not bad. Indian market, I don't really give a two hoots about that, even though it's a very powerful market. It doesn't really have a real correlation with US financial markets. They sing their own tune. Is down 1.9%. But what we really care about is the China market, which is down 4.5%, in Hong Kong, but only down one. And this is interesting, I'm telling you, only down 1.2% on a relative basis, outperforming hard right now. And of course the rest of it. So before I go any further, for everybody out there, as you all know, I don't like repeating myself too much. You all know all my content is delivered directly on the real-time Twitter feed that you're connected to right now, Eldon. So you're privy to seeing everything that we do, everything. I know we have. If it's really serious and important stuff, I'll put out the breaking news and stuff like that. But I'm not a news delivery service. I'm a trader. Okay, I'm a professional trader. Trade my own money. That's where my living comes from. And then I have this trading service that I work with a whole bunch of people, and it's an exciting thing that we started in 2014, and it's fantastic. So my trade alerts, my comments, my tactical charts all come out on the Twitter feed. So that's the only thing that you have to keep an eye on and do whatever you need to do from that point. Now, saying all that, some of you who track my Twitter feed a lot, and especially at times like this, I put out some of the reasons why what is going on. So what we have here is a historical moment. The last time futures were down, limit down, that's 5% from where we closed at, and you can see that here. This is where we closed at on the nice reversal rally that we got on Friday, somewhere around 29.60 or so, 29.62, and this is where we are right now. So let me move this one and let's take a look at this because it's easier on the eye. What I did first thing today was as I got home and turned on my computers to see a graphical technical depiction of what was going on instead of just looking at the markets and saying, oh my God, we're down 132, is the fact what are the low levels that I'm looking at. So I drew immediately, first thing I did, and a lot of my charts are pre-constructed. So this one is a new one that I did very quickly, just showing levels, demand levels, supply levels, simple as that. And this is where we were on Friday. So just follow me, guys. And this is where we came down to. This happens to be some reversal points, major inflection points from August and September of 2019. August and September of 2019. You can see that right here. Point below that was also August of 2019 and two other. And of course, we can keep going lower and lower, but I'm looking at some major reference point as to where we can come down within the short term. In other words, within the next 24 to 48 hours. Okay, so this is what I'm looking at. So, and it is 27.28. So if we fall to 27.28 from where we are right now, that's not too far away. Okay, that's not too far away. 28.14, that's what we are right now. I'm sorry, we're at 28.30 right there. This little red, this green candle is short covering that's happening in the Globex markets right now. So I'm going to cover the technicals very quickly, the basic ones. I'm going to jump back into the real reasons why this is happening, which you guys already probably know. So this little green candle here is where we are right now at 28.30. So if we hit the next, we won't hit 27.28 tonight, because the Chicago Board of Options, the Mercantile Exchange and Chicago Board of Options, CME basically, Chicago Mercantile Exchange and the Chicago Board of Options Exchange has limit down. Limit down means you cannot be more than 5% down from the previous closing, okay, which happens to be roughly around 28.19 on the E-minis, okay? We already hit that, by the way, earlier on. If you look on your iPhone, which is the easiest place to look at, we'll look at on the charts, the S&P 500 futures actually hit 28.1875. So we actually hit 28.19 and slipped below by a quarter of a point. So from that, we are at 29.30 right now. So this is 28.30. So let's say, for example, by tomorrow, not by the open, because limit down, we can't go below 28.19. Everyone clear on that? They're going to shut down trading. All right. The last time this happened was on the evening of President Trump's win. Dow futures were down 1,000 points. At that time, we were far lower, obviously, and we were limit down 5%. Boom, shut it down. What happened the next following day? Boom, the market turned around. We fell a little bit the next morning. I have a fantastic webinar, my commentary video cast on that, and I said that this was going to be literally within 24 hours when I put out that thing. I said this is going to be Brexit on steroids, and people said, "What do you mean?" I said, "Remember Brexit when we fell and we thought the war was going to end because of UK's exit from the Eurozone and all the garbage that was going on there? Well, it was Brexit on steroids, time steroids. The market went nuts. Am I going to say that this is going to be the same way that way? I have absolutely no clue. We shall see. But I have my opinions. So anyway, so that was the last time on the night that President Trump won, that the markets collapsed. Dow collapsed 1,000 points, 5% limit down on the S&P 500. I can't even remember what it was till we look on the charts. So that's it. So we can't go below 28.19. So we'll be stuck around here somewhere, and we shall see. So let's say tomorrow trading opens, and once trading opens, it's free for all, right? So everybody panics, all hell breaks loose, and we come down to 27.28. And right now, technicals, you can throw it out the window. Right now, it's complete capitulation. Massive dislocation in the currency markets, in the high yield markets, massive dislocation in the oil markets. So it's seriously a complete wildfire. It's the best way I can explain it. There will be measures taken. I'll mention all that going forward tonight. So that's 102 points roughly from here to here. So you're talking about roughly another 800 points in the Dow. We can lose very fast, very quick tomorrow. Is it? So we open down thousands of plus points and losing another 100 points. It's pretty unprecedented. What we're seeing, we haven't encountered ever before, as far as I can remember. Not even in 2008. All right. So we'll have to play it again. This is not play safe. Fast traders can trade, try to make scalp some money on the short side. Even the reflex bounces you can make money on. But I would highly recommend that people who are not active traders or really know how to handle this, sit aside. Sit aside. Okay? Don't panic. Want to sell your positions, go into cash, fine, do it. But don't try to trade this market tomorrow. I'll be putting out my alerts. There'll be limited alerts, but I do not. I'm just asking. I'm just saying. I'm not your broker. I'm not your advisor. I'm not your grandpa. I'm not your sugar daddy, right? So I'm just letting you guys know that it will be very fast, very furious. We know what spots we're picking. I'll tell you what stocks will open up green because we have them. And the other ones will open up deep red. And we have a few of them, like AMD, a little bit of Netflix, things like that. A little bit of the SPY calls. Wish I had the SPY puts, but then how would I know that Putin would basically drop a JDAM on us, So bottom line is that those will be deep red. So I'll be scrambling. I'll be real busy. So, but if you guys are, this is, I'm not pushing, again, I'm not recommending that you guys don't do it. There'll be a lot of money made over this week. I know it. I've shown it to you guys last week and the week before when we had 1,000 point volatility almost every other day. But if you don't want to do anything, just sit aside and see what's going on and, do whatever you need to do. So just good words of wisdom. All right. So that's it. So let's take a look at, so let me get into why this is going on. Well, first of all, we have the corona thing. It's pretty serious stuff. However, the market has discounted a significant amount of the corona fears. And that's the reason why we jumped up. We have been jumping up on these long tail hammer reversals repeatedly every other day, including Friday. Net on a Friday, it was an inside day candle again. And people who are technical people know exactly what I'm talking about. So basically, let me get my drawing tool. That's a hammer reversal, long tail. We love those. We made serious money off that. That's when the market basically ran up about 2,000 points. Okay, then hit that support. I mean, hit that resistance level that is one of my previous charts. You guys know what I'm talking about. And then we had a very bullish day, a bullish engulfing candle, very powerful. Then we had this day. Oh, this is the day that the markets had closed down 762 points. I told you guys repeatedly, scroll down my Twitter feed, you'll see it. Especially the ones, like Eldon, who's just joining us. And I said, listen, I still am long. This candle is an inside day because this body of this candle wasn't violated down. It's an inside day, and the market should have a strong probability of rallying. And boy, did the markets rally. We went up huge. Okay, on that day. That was Wednesday. Then Thursday we had another red candle, which was also an inside day, it was still within the body of the previous bullish engulfing candle. However, on Friday, the market gave in, came down, created a higher low, and then end of the day between 3 and 4 p.m. we had a massive 400 plus point rally, which in itself for active traders you can make a real decent money on. Okay, and then this happened. Everything just from here to here. This is where we are right now with futures down 134. Now, why did this happen? Number one, a lot of the corona stuff, a good portion of it, at least for the short term, I know it's spreading. That's a natural progression of the coronavirus. New York State declared a emergency so they could release funds and do all kinds of necessary measures. It's creeping into New York City, which is inevitably going to happen. And then Italy shut down. Northern Italy, which is the most prosperous part, the industrial part, Milan, Venice, all those areas around there. What's the town that Ferrari is built? Maranello. All those factories shut down. So Italy's in lockdown. Italy's the third or fourth largest economy in the UK. I mean, in the Eurozone. So what do you expect? I mean, a party? I mean, that's a serious blow. And so Italy shut down. So there was a lot of negative news. And then comes this oil stuff. And this is a serious matter because even before this, on Thursday and Friday, the oil market was trembling. Oil prices were collapsing, and high yield credit primarily related to the leveraged bond side, to the leverage part of our great multi-billion-dollar shale industry, was starting to blow out. What they call CDS spread. This is the risk spread on leveraged bonds, high yield bonds, lower rated bonds. So that was blowing up. So that's scary stuff, because that means the underlying foundation of the credit market, and a lot of money came out of the high yield credit market, I don't want to get into this too much, started to come out. And it happened very quickly. So the markets got pretty nervous about that. Then comes over the weekend, they had an emergency OPEC meeting. They were supposed to agree on a temporary oil production cut, so oil prices could go up a little bit. But then Russia decides to say F you and walk away. And the Saudis and the rest of OPEC were just like, what the hell? So Russia basically has a lot of different motives. I don't want to get into it right now, okay? But one of the motives, and I put that out, I didn't make up this story, I said that well before, basically wants to decapitate the US shale oil industry. Decapitate, okay? Or just kneecap, do whatever, because it's been a major competitor to the Russian oil industry. All right, we're self-sufficient in oil. So that's one reason. The other reason is whatever. So Putin started a war with the Saudis. Great, good luck. So now the markets are freaking out. It's really as simple as that. Read up on those articles, read up on your own, because I'm not going to sit here and explain to everybody like every little nuance of that. But I just explain very simply. It has nothing to do whether you like little Putin okay, and his shenanigans. But what he did right now, I don't think is going to earn him any love from the heartland of America, where most of the shale oil companies are coming from. Do you guys understand what I just said? You guys understand
Yes,
it?
yes,
Yeah,
yes.
Yeah.
following the
Like, I'm trying to make it real simple, okay? I'm not trying to tell you to take sides, and who cares if you take sides or not? Your business is just to make money. What I'm basically saying is this big drop that we're seeing in futures market, it's coming from overseas. It's hitting us. This is primarily, right for now, has to do with the oil market collapsing. And the oil market is collapsing in simple terms because Russia will not in any word form talk any sense and just walked away, and the Saudis said, that's it, F you, we're just gonna destroy you. Now how will they destroy? They're gonna go into war with them. But it is an oil war going on right now, unprecedented. They said, okay, we'll flood the market with oil, we'll drop oil prices, because automatically you flood the market with oil, 10 million barrels a day, oil prices collapse. That'll hit Russia really hard, and I believe that they are talking underneath the table or whatever, on the special phone, saying, hey guys, let's chill out, okay? We don't want an oil war. It's not going to help anybody. In the meantime, our shale oil industry, which has been fantastic but heavily leveraged, borrowed money because they need a lot of capital, is getting pummeled, and there's going to be a lot of defaults, and that will bring the markets down more. That's all. You want that? I don't think so. You want a little cheaper oil and a recession? I don't think so. Okay, so that's the way it goes. All right. Now, bottom line is this is what's going on. Now, technically speaking, there is no technicals at this point. How about that? The market, I mean, the lines that are drawn is this is it. Let me show you the weekly chart first, and I have it here and I have it there. At this point, the market is approaching something of a major support level, which I've explained before, which happens to be this pink line, and that is your 150 week moving average. Not even 150 day, 150 moving average. That's at 27.84. That's just around the corner, a couple of 100 points. And I think we hit that tomorrow. So don't think we're just going to open up and start bouncing. I don't think that's going to happen. Now, the other thing that I want to explain to you guys, which will happen, is the European central banks and European bankers seeing the condition that is developing right now, and Italy is almost under shutdown, is they are going to take some heavy-duty liquidity actions to preserve their banks, to cut rates, to do whatever they need to do. And that is going to be a short-term cushion for the European market, and that's going to help us too. We already cut rates, and we're going to cut rates again in the Fed meeting, I believe, a week from now or so, or 2 weeks from now. I don't have the exact date. They're going to cut rates again. We can only do so much. We need a global intervention, and that's exactly what's taking place. And those things generally stabilize markets for a while. It happened the same thing in 2008, 2009, massive global central bank intervention, and then the markets stopped going down and started going higher. Do you guys understand what I just explained to you?
Yep.
Yep, because I don't care what industry you're in, you're going to get hurt. I don't care whether you're in real estate or this or that, you're going to get hurt. Our markets go down more and more. The US goes down into a mini or maybe severe recession. I don't care what industry you're in, you're going to lose money. I don't care whether you're running your small business or this. Well, yeah, some small business are recession proof. It doesn't matter. But if you're in construction, this and that, it doesn't matter. It is going to get hurt. So we don't want the market to go on a free fall, because that's going to hurt the whole main street too. Okay. So at this point, nothing to really, we are so oversold. In fact, last week was pretty great. This was last week. This is a weekly chart, right? So this is this week. No, this was last week. So this was last week. Look at that. It was net buying. looking at the purest form of market flows, the E-minis contracts, it was actually buying. The small little red that you see right now is which is very light volume, obviously, is where the futures are almost limit down 135 and the Dow down almost 1,100 points. You guys understand what I'm saying? This was last week. It was pretty nice. It was actually a inverted hammer, but green, holding over some very important levels. And this mark that you see here, this red, is what is happening now. This one, very light volume, but that's what's showing up. Just want you guys to understand that. So we have some lower levels to contend with, but people can write this down. Around 27.85. Maybe a little slippage towards 27.31, but I would say around here you're going to find some substantial support at around the fib, 38.2%. So that's another how many points? 26. If I'm taking the lower end of the picture, 26.75, that's 25 plus 26 is 51. So another 400 points. We're so used to 400 points, right? 400 points. So if you bet too big on the short side, just, oh, I'm going to catch this 400 point, you might not be able to catch it. That's the only thing I'm saying. Putting a small amount out there, fine. Because at this point, there will be massive central bank intervention. There will be other monetary and fiscal measures taken by the Trump administration to stabilize US financial markets, which will stabilize global financial markets. So I just want you guys to understand that. All right, let's take a look at the same picture on this, which is easier to see. This is the same thing that I'm showing you. 27.25, this is where we are right now. Let's take a look at the daily. This is sorry, not the daily. This is the 15-minute trader's chart, right? We have traded this chart consistently on the bars. And again, we are not crazy day traders. Sometimes we do, but we're not 5-minute traders. But people can use my charts to trade 1 minute if they want. My goal is to provide the tools, put out a couple of suggestions, which generally are dead right on the ball, even in these very extreme volatile market conditions. But honestly, there are many of our members who use my charts to trade on their own. Sometimes they'll do the opposite of what I'm thinking that I'll do. I might be 2 steps early, first come down, then take that big move up, and they'll say, what the hell, I'm going to put out the shorts and just sit there. And they're using my charts to do it. So anyone can, people should do what they think they should do. Now, newer members who just want to follow what I'm doing, there's just one word of warning. Because the markets are so volatile and so fast, I cannot physically update my Twitter feed every 5 minutes. So if you have a busy job and stuff, don't trade during that time. Or if you do trade, buy some time and don't look at your P&L. Because there's no way you can, what's the word? Have your cake and eat it too. Like, well, I always thought it was a stupid thing. But whatever, you can't have it both ways. You cannot be an active trader and not being looking at the screen. Expect to look at the screen every 2 hours. Sorry. Because in this type of environment, the markets go up 3, 4, 5, 6, 700, 800 points in a matter of, some cases, minutes. So just letting you guys know. Now somebody says, where do you think this stock will go? Dude, I've told you guys so many times that in this type of environment that we're going through, the only way you can trade ranges. That's it. Whether it's a 5, 6, 7, 8, 9, 10 point range, you can sit here and predict, given the circumstances that we're encountering, coronavirus, Vladimir Putin, and the oil war that he has started with Saudi Arabia, which is going to demolish which is not going to, but short term will hurt tremendously our shale oil industry, which in effect will have a highly negative impact and has started to on our high yield market, sending tremors across the stock market, sending our 10-year government bond deal to a unheard of. I'll show you the chart. It's like crazy. Do I have the live chart on that? The TNX I don't.
It was a 0.5% earlier.
0.5% earlier. Unheard of. There is massive dislocation. So saying all that, don't sit there and think it's just like it doesn't matter who it is, to tell you a projected price range on a stock. So throw all that for the short term out of the window. I'm going to be, look, I'm an active trader. So I'll be doing some bunch of trades. I'll put out some of the ones that I'm doing, but things can change very quickly. Look, I make a living doing this. Most of you don't need to make a living doing this, right? You have your regular job or your business, you got this coming. This is my paycheck. So I will attack the market with a vengeance like I always do, because I don't have the luxury of just sitting around. But I do it with smaller amounts. I'm a lot faster. I have a lot of cash on the side. And that's the way you survive. Not putting everything in and waking up, and thanks to all those other factors, we're just like gonzo. So oil futures right now, it's showing down 10. That's pretty good. And let me just show you. So I'll show you that in a second. So this is where we are. Now, the 15 minutes not giving me any indication whatsoever how far we can move down to. I would say 27.58 right there, which is a lower Bollinger. Let's take a look at the 1 hour chart. Do I have that here? No, this is the weekly chart. Oh, this is an interesting one. If you remember from my previous webinars, I talked about short-term bounces that needed to be sold. And I also showed you guys the weekly chart, which I said does not in anywhere from showing any type of confirmation on an established short-term tradable bottom. I'm sure you guys remembered that because I showed you guys the weekly chart. Well, obviously the weekly chart proved to be right. Now, normally people can't trade off the weekly chart unless they're swing traders and they don't like looking at their P&L during the day. I'm sure there are some people like that. I'm not. I want to see my P&L all the time. Okay? So, and you know what P&L is for new traders, profit and loss statement. I'd like to be green all the time. I'm not. Net, yes, on a weekly basis, monthly basis. But, so bottom line is, the weekly chart right now is on a major breakdown level. So at this point, if you look at this chart, and this chart was drawn a while ago, I called the whole move, the wave 5 move. I did not expect this to happen. Neither did anyone else. Yes, some bears on stock twits and other places say, we knew this was going to happen. Yeah, bullshit. They didn't make a single penny from this run up. So now they're like, yeah, you know, I knew this was going to happen. And they'll give you a slew of reasons why this should happen. It's all bogus. Okay? They're lying. So, like they say, grapes are sour. All right? Generally, we are bullish biased. Right now, I'm still bullish biased. I still believe that the markets will recover. However, it is under major duress and stress right now. So we have to adapt accordingly. Because I'll show you the monthly chart, which still shows we're in a bull market overall uptrend, even though it doesn't feel like. So saying all this one can break. I have a big fat red line here that was drawn a while ago, and that's around 27.23. So we are at 28.90, we're at 2800 right now. So you're looking at another 27.23, another 50 points. 27, 23, 70, no, another 100 points roughly. So that's another 800 points to this line. This line is your 2018 break-even level. Can we get there? Look, anything can happen, but I'm not going to sit there and prognosticate where we're going to give back everything and go down to where we were when we barely broke even in 2018. That's a lot, but this is bad, like really bad, okay? Now, the same thing happened here, and we reversed very sharply. The internals are severely oversold to the point where it's not even funny. But when panic takes over the world stage, for reasons explained, internals and all these little stochastics and everything don't work. Are you guys with me so far? Any quick questions before I move on?
No, we're fine.
Okay, good. Because like they say, as long as we know what the danger is, then we can survive. If we don't, then we walk in like, and then somebody comes in, and does a drive-by and takes you out, then you're like, what? So at least we know like what's going on. So this is very severe stuff. However, severe means, in my book, severe means opportunity and and some fast trades, which will generate some significant moves, because there's always refresh rallies. And I repeat, they can last an hour, 2 hours, 4 hours, maybe a day if we're lucky, given the circumstances. But I'm going to take advantage of every one of those little moves. I am not going to go there nutty and start shorting, because there will be some heavy duty cushioning action that's coming from the government, as well as the Federal Reserves and the central banks around the world. So I don't want to put too much money there on the short side, even though intraday I will certainly place some SPY, primarily SPY puts. Depending, if we get a bounce, you can buy the SPY puts based on the 15-minute charts. If we get a bounce up here, for example, you know, a couple of 100 points, immediate bounce, you can rest assured that first bounce will be sold. Will be sold. No question about it. And so you can put out a SPY put at that point, and even if it starts to go against you and the markets go, and it happened, markets go, you know, pulls one of this like it did on Friday, then at least you won't lose so much money. So just keep that in mind. It is fast trading, active trading, so it's only for active traders or people who can handle the speed. Let's take a look at the monthly chart. Now, this is an interesting one. I drew this a while ago. Nobody believed me that we could have gone to 3,400. And this is when we're down here. That's when we're down here. And you guys, it's all validated, all recorded on my Twitter feed, as well as, most importantly, on my YouTube channel. Nobody believed me. And even here, back in during the Christmas Eve massacre, 2018. Okay? But who cares whether they believe me or not? We stayed net long, and we made a ton of money. So now we have this. So when you look at the monthly chart, does it look really scary? Just asking a quick question for you guys. Just wondering what you guys are thinking. This is the monthly chart. Technically speaking, does it look like the overall bull market trend that started in 2009? 2009, that's what all the bears and all the media will make you believe. This is the bull market channel. Has the bull market overall broad macro channel been violated?
No, looks still bullish.
Looks what? It's still, I mean, it's still technically bullish within a very wide range. It just shows that we still have room to fall without totally violating. And I'm talking 1,000, 2,000 points, guys. We have still room to fall. And this chart wasn't drawn yesterday just to keep everyone happy. This was drawn months and months ago. It was drawn actually back in 2016, 17, around that. And I kept on adjusting it. So at this point, that 2,700 level, very likely. So another 800 points on the Dow to flush out, which will bring us to the lows of 2019. What was the, and you can see that very clearly here. Hold on, right there. These are the pattern symmetries I'm looking at right there. May of 2019, the market turned on June of 2019 and then took off after creating one more dip that got bought real fast. So I believe the first level of major support comes in around 2,700, and you'll get one vicious rally which will move up towards 2,800, maybe even 2,900 and change, which we were at just the other day. So that'll be a pretty powerful rally, like around 1,600, 1,700 points. If the market, and please look carefully, I'm going to show you, just draw the roadmap here, guys, if you don't mind. If the market, this pattern right now that it's been established, is a head and shoulder. Flip the birdie, okay? Is a head and shoulder a bearish or a bullish pattern for new members? Aldi?
Bullish.
It's bearish, okay? A head and shoulder is where your head is, your left shoulder, your right shoulder. This is your neckline. Here's your head, here's your left shoulder, here's your right shoulder. There, that's a bearish pattern. So right now we have broken below the right shoulder. We are heading towards this zone. It's a given. That zone is capped at around 27, 26, which is like I said, roughly about 700 points below where we are on the Dow from now, like from real time. So that's inverse head and shoulder, which we have played a lot, is a bullish pattern. You remember that term, right, Aldi?
Yes, yes.
Yes, so inverse head and shoulders, here's your head, left shoulder, right shoulder. We have had a lot of inverse head and shoulders along the way, and that's a bullish pattern. This is right now a bearish pattern. Now, within a bearish pattern, you can still have reflect bounces, which will test the level. So here, what I'm saying is after we drop, we will attempt to make a sharp move to get over the right shoulder. Most 90% probability initially that will fail. That means the market will come down again and try to retest this very important line, which is the neckline. There's your head, there's your left shoulder, then your neckline, where your collarbone is. You break below that, you go. So here we broke the first neckline, the second neckline is here. We haven't gotten there yet. So my point is that these reflex rallies that happen, it can be in 2 hours, in 4 hours, in 6 hours, for a day, can be played for a lot of money. And we have done that. And then you cash. Don't expect the market, given the damage that it is incurring and has incurred, to suddenly turn around and say, oh, hallelujah, everything's good. Unless we have a miracle reduction in coronavirus cases and this Saudi-Putin war, oil war, which is a full-scale war, by the way. Most people don't quite understand how serious this is. Starts to calm down. My opinion, I think they'll calm it down. All right? Putin doesn't care whether he stays in power or not because he is in power. He's the king. No one can remove him. Do you think they have elections in Russia? Come on. The Saudi king, what is shit does he care? You know, he doesn't have election and stuff. He's the king for life. So the bottom line is these guys can hammer it out, in my opinion. Well, the person who is to care about election is our president, Donald Trump. If this keeps on continuing, he will, no doubt, in my opinion, lose the election. Not just because of the market, because of the unmitigated, full-scale damage that's going to happen on the oil patch, which are some of the strongest red states that voted for President Trump. So his vote will be, I mean, his base, part of the base, believe me, will have doubts. Okay, so you think he's going to let that happen? I don't think so, and I hope it doesn't. But even if Biden wins, and I just look at it from a market standpoint, the markets will go higher from wherever it went. Because the Sanders guy ain't winning. So just letting you guys know. So you think President Trump will just sit around and lose the election? Of course not. So he'll do whatever it takes to prop up the US markets. Federal Reserve will do whatever it takes, but we need them two alone can't do it. We need global intervention, and that is what is already starting to happen. These are all central banks around the world. That's just the way it goes. It's all right. So enough of this. This is this. I would like to see it. Generally, by the time it gets down here, you know, you start to get a turn. The last time we saw this was back in 2008, 2009. The credit market and the high yield market is much stronger shape than it was in 2008, 2009. However, the way the high yield spreads and the CDS spreads, which is basically the VIX of the high yield market, if you want to look at that, is blowing higher, is reminding some bond traders about what happened in 2008, 2009 with the housing market. So they are just panicking. Yeah, go ahead.
Donald Trump's re-election.
I'm sorry, what?
Re-elect.
Please fix your mic or else I can't hear you, whoever's speaking.
We can only re-elect Donald Trump. All right, fine. But no, this one. This is my favorite for a very long time.
I'm sorry, sir. With all due respect, I can't understand what you're saying. So if you fix your mic, then I can maybe understand it. It's just coming out like you're underwater trying to talk to me. You can type in your question if you'd like. I can read that, but I can't hear you properly. So let me move on. So anyway, so that's a longer term picture. Now, stocks that we have that are that have been going to the moon, for a better choice of words. The other thing that I'm sorry, before we let's look at some. Oops, sorry. What is the fixed thing I keep on looking at? Oh, here. Is that the one? Yes. So this is the VIX futures blowing higher right now. Okay. So let's go back monthly, 10 years. So we have taken that out. The last time we were around these levels was in October of 2011. Wow. October of 2011. That's where we are right now. And so that is really saying something. All right. So that's how scared the market is. The VIX futures are right now showing October of 2011. I got to go all the way back, 10-year monthly. So right there. So we're almost there. This is unheard of. I have nothing else to say. All right. So there's real serious panic for reasons I explained. The VIX futures are up here. Now, stocks which we've been doing very well on. I'm sticking to them. Gilead Sciences. All right. Vaccine developer for the coronavirus. You don't have to overthink this. We have done net, we're up more than 200% on these options, and if we keep on rolling them out. So, oops, I just took it out. Why did I take it out? Let me just put it back. So whoever was asking the question, try to ask me, without fixing the mic. I'd be happy to answer that in, to my best efforts. Hold on. This is a monthly chart of Gilead Sciences, not even daily, not even hourly. And I had the fib extensions here, and I'm going to put that back. So you guys have a bigger picture of what this stock can do. The stock basically did nothing for, since August of 2017. It's not a stock between 83 and 62, 20-point range. Who gets excited about a 20-point range over 3 years? I don't think you guys do. So now we're on the cusp of a major breakout. So quick, get the pen, change the color, 1 second. Here's your range. Look at it real simple. The range, this one is around 85, low is 57. High probability. I told you we were going to go past 80. We went past 80. It didn't take a rocket scientist to figure it out, okay? There was a lot of cluster, and we were buying the stock here, as you guys know. Not all the way up, or like specifically recently, and we had bought Gilead Sciences as early as November of last year, and it did nothing. Basically sat there. Now it's a full-fledged breakout. First level of contact is around the 83 level, which is the fib 61.8. I'll take 3 points. Now the options move slowly. They're not like wacky like Netflix or something that are jumping jack flash. These are like slow, so they're mostly swing trades. You can sell them intraday if you're up a lot. Whatever your up a lot means. I am looking at the stock to basically hit that 85 to 90 level. If it has this range breakout, you will expect to see the stock go all the way up to 110. And it might gain a lot of traction and it has been, as more and more traders get into Gilead Sciences, not just the institutional guys who were buying it for months and months and months in the 60 to 65 level, and now they're up 15 points on it. A lot of money for the big boys, but that's what I'm looking at. So this is a great chart. Full accumulation, everything is good on Gilead. So this is I would venture out to say, a safe stock in this environment. So, and I've been suggesting that a lot. Let's move on to the next one, which is the next. These are the real companies, right? Which is Moderna, which I told you guys to buy on the first day of the IPO at around. Gosh, what am I doing even? See now. Beautiful. So first day of IPO, mRNA. 1 second. I got to go back a little bit. Weekly. It actually goes back a little bit because we bought it in the This is interesting. The stock Z, you find, isn't this interesting? I put in mRNA. What am I doing wrong here? The stock just came public. It didn't come public in February of 2019. I know that. So why does it take us all the way back to 2000? The stock never went to 11. This is very strange. We bought it in the $26 range. No, I'm thinking of something else. Oh, I'm thinking of SDGR. What am I thinking of? My apologies. So Moderna I'm talking about SDGR, which we told people to buy at 26 and it went to 60. My apologies, guys. Sorry, I thought I was losing my mind. Must be the time change. But here's the chart of Moderna, and it has a very wide trading range. It finally is getting to the upper end of the trading range. It's a slow-moving stock. You would expect Moderna to be up a lot, which we played. And then they sold it really hard here, and they did it secondary, I believe. And then we like I said, nothing changed. Keep on buying it. So we kept on buying it around 22. It's at 29. I believe the stock is about to break its upper end of the range right here. So I'm expecting it to go back to 36. If I draw another one of my crazy lines, I am looking at the stock, around the $38 range. Great company to a real company to play. Slow moving options. They don't move that crazy, but this is another great one. Another one that I like, which is on the forefront of coronavirus COVID-19 research, is Regeneron. Regeneron is an unbelievably beautiful chart. Let's go back and we've been trading this very effectively. Now the stock does move $14, $15 here and there, right? That's why we play it. So if you catch it on the wrong side, and it might be not your fault, Moderna or Gilead Sciences up, every little small wild spiker on the crazy ones are up, which we have been playing, few of them on the coronavirus plays, and Regeneron's down like $15 because all the biotechs are down. That's because Regeneron is a NASDAQ 100 stock, and it's also part of the biotech index, right? So if the biotech index is being sold like crazy, it might on that particular day, just so you understand, have a tough time going higher. Does everyone understand what I just said? Yes, no, maybe?
Yes.
Okay, sounds good. So looking at it, like how far can you go? Let's go 10-year weekly. This stock, in my opinion, it's already at 500, so that's a given. We already bought the 540 calls. We traded that once. I still have ones that are slightly down right now. I'm going to buy more of this. I believe the stock will hit again. We'll complete the first completion, which is this right there, 550. And once it gets to 550 and consolidate, that means comes down maybe $3, $4, $5, $6, $7, $8, $10. That's standard procedure for a big mover like this. We will have a real push, and these guys are on the forefront, by the way, of the coronavirus stuff from the genetic side. So they might be the first ones to develop the vaccine, which actually works. So don't be surprised. The stock will be up $100, $200, $100, $150, and like they'll halt it. So 550 is what I'm looking for. That's from a swing trade standpoint. So that's a sweet trade. That's 50 points. 50 points. And the stock will have a fair shot to hit 600. Given the conditions on the coronavirus side and the fact that they're working so actively to bring out any type of news that comes out of the company saying they're closer, and they've already announced some very powerful initiatives on what they're doing to come up with the vaccine, the stock will just go to the roof. Now, in the meantime, for active traders, the stock basically, it does this. 500 came down to 478, moves up to 489. That's 11 points. Comes down to 480. So 7, 8, 9 points is kind of standard with this stuff. So best to buy time. And the options are not that cheap. Just keep that in mind. Best to buy time and buy some out of the money calls and just leave it there. That's Regeneron. We have some small spikers which are going to be up nicely. This one has worked out for us fantastic. INO, told you guys to buy it. I can't even remember, but all the way somewhere down here, the stock is more than a double. This is now the coronavirus play. Looking at the daily, which I had shown you guys, you got to go back monthly to see what's going on. It's pretty much like up there. It hit exactly where it hit back on February of 2014. These are not working on valuations. They're just working on speculation that there'll be somewhere, with it, the Inovio and stuff. They're not working on the drug. I believe this is the company that I forget. They make some sort of again. What's the word I'm looking for? They're not a glove maker. They are. I'll let you know. They're not exactly on the total like high-end research side of that. The next one is APT, Alpha Pro Tech. I believe they are the ones who make the masks, right? So we played this very nicely, and right now is here. Still an inside candle. These are fast-moving stocks. I tend to buy the common primarily on these things, and so for active traders, they're very nice. That's a monthly chart. Looking at the weekly chart, we hit 49. We were in it around this level, and right now is down here. So I see downside limited to maybe 13, maybe 10, and the upside is 26. So you can really trade these things fast and furious. So I'll stop here because I've kind of covered a lot of stuff. Not even going to show the McClellan oscillator and stuff, which is going to be like the minus 200. It's going to be like horrendously crazy. But I'll answer any questions that any of you guys have. Any question? Futures are now limit down, 28.19. Wow. Let's take a look at this.
Hi, Frank. This is Z.
Yeah, of course.
I know you mentioned SDGR, and we didn't. I know it's a new IPO and technicals are limited, but I just still want your comment. It's very important for me that I hear from you.
I think it's going higher. Look at this chart. I told you guys to buy it at the 39 level. The stock actually went to 43. This is not a day trading stock. This is, this is the one. Eldon, you with us?
Yeah, I'm here. I'm just looking at the chart.
Yeah, so SDGR came out as an IPO. I got confused with Moderna. Back in February. So right on the before it came out and on the day it came out, I said we go in. So we bought common because there's no options. We bought common around 26, around 27. The stock pulls back a little bit, and within a matter of how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Within a matter of 13 days, 2 trading weeks, the stock hits almost 60. Home run. We sold a bunch along the way, and I know some of my members who sold it all the way on the top. I was mostly out of it around this level and still held some. Then the stock pulls back and hits it doesn't have a longer length of time for me to do some exhaustive technical analysis. I'm just showing you. This is a very powerful triangle. You can call it the Bradley triangle. You can call it some fancy other technical names. All I know, this is overall a bull flag. You've got a massive move up here and a consolidation channel. Right now, I believe this company, by the way, is funded by Bill Gates and many other big names from Silicon Valley. They are Citron, which is the ultimate short seller, issued a report saying this is the next Tesla. We didn't buy it because of that. We were already in the stock when that news came out, and it popped more. Okay? They are disruptive. Artificial intelligence and God knows what. That's beyond my pay grade. Okay? They use for all kinds of biotech simulations, clinical trials. They literally are revolutionizing the industry, and no one talks about it. Now, who's going to pronounce the name Schrodinger, But whatever the case, my opinion is the stock hits 50. I have the 50 and the 55 calls. Now, I'm going to push them out into April, this coming week, but I expect the stock to go higher. This is what the formation is right now. So that's pretty much it. And the best part is options are trading. So now I don't have to spend a lot of money buying a lot of stock. I can just buy the options. Options do have a wide spread, see. Okay, see, they have a wide spread. I noticed like $2 because the market.
I noticed that.
The market makers, playing around with us, but that's nothing we can do. A lot of biotechs have that, so you have to kind of play around the middle and try to grab that. Yeah, so it's going higher. Now, if it breaks down completely, for what? I don't know. I don't see any negatives on this company. Like, they're not in clinical trials of a drug that doesn't get approved and the stock's going to crash. They are the ones which facilitate drug development through the form of artificial intelligence and all kinds of computerized learning and all that stuff, which they're the benefit of, because that's what most drug companies are going. They're trying to speed up their approval processes and their development processes. So that's exactly what this company does. So please read up on it. It's all there. It's all there, and then make your own mind. But I like it a lot. I think it's one of those calm anchors in the middle of this massive storm that we're going through. Let's take a look at a stock which we trade frequently and have a 70 to 80% win ratio, which is AMD, which everyone knows. In the case of AMD, it was actually nicely green on Friday. And then it went negative and the market started falling and stuff. We kept on buying, and at the end of the day, it came up like powerful. It ended up green, because Morgan Stanley basically said that this company is benefiting from all kinds of stuff. And so this is your short-term trading stock, right? Options are cheap. They're very elastic, high implied volatility, and you can make money off it. Doesn't crash and burn and put you on the street, because options are so cheap. So looking at our chart, this is what it looks like. I like this chart. Now tomorrow it's going to open all the way down here. It'll open down $3, $4, $5. Nothing. No fault of AMD. Fault of what the market's doing. So I will be a buyer. Now at that point, we have the 49 calls, 50 calls, or the 48 calls. I can't remember. Strike price. So at that point, you might have to readjust your strike price. But I like this stock a lot. It's very stable and great company. And it's come down nicely. I've been staying away from NVIDIA. Nothing to do with NVIDIA. This is your, by the way, daily chart. Very nice, channel higher. The 5-day moving average turning higher. Everything looked good till today. Deal with this. So whatever happens tomorrow could be a short-term phenomena for reasons I explained overall in the market. So this would be one of my picks, what I like. Nice hammer. And it was, if this didn't happen tonight, the Putin stuff and increased corona cases and stuff, then the stock would have opened up right there at the 34 moving average and would have generated 120% on my money. But for the short term, I mean, for tomorrow, obviously at the open, that's not going to happen. What's the other stock that's going to go nuts, which we played? And I told you INO. We have OPK. Told you guys to buy it down here. The stock went to almost $3. So we had close to 100% return on our money in what, 24 hours, 48 hours. I still like it. This is a highly speculative play, but at the same time, this is sorry. Told you it was going to break through 255. Told you guys to buy it around the 160, 170 level. I bought it pre-market, then I came in. I actually told you guys to buy it after market, if I remember correctly. I see the stock blowing up towards $4. Right there, 100% on your money. Another coronavirus play. The other one, which we made money on, and I don't have that much, but I'm going to get into it again, is CODX. Now, many of you have missed these trades, so this is your chance to do it and not complain like, oh my God, the market. I say, screw the market. Let's make money where the money's being made. This is the Fibonacci is blown through the roof. Hold on one second. I'm really curious to see what happens tomorrow morning. There's like such serious stuff going on. How do I get this stupid Fibonacci out of the way? But hold on, let me get this out. Just 1 second, guys. I don't know how I can even do a Fibonacci on this, but let's see. Remove drawings, clear drawing set. Okay. Yes. So I look at it this way. All right, let's keep this simple. Let me get my basic. 1 second. Eldon, you have any questions? While I'm
No, not
doing
right now. I'm just trying to soak everything like a sponge.
Okay, no problem. It's a good thing to do. So this one, you can play these things for 3, 4, 5 points, easy, easy. Okay. Co-diagnostics is again working on the on the coronavirus vaccine, and all these things. Don't ask me to give you a whole research thing. Do your own due diligence. I played as a trader, and I don't remember exactly, but I remember buying the stock somewhere in this range when it popped up, or lower, and the stock went up to 22. Right now, I think it's a good buy level with the stop at around 10. Buy the common with the stop around 10, and you can trade it up to 18, if not back to 22. So right there are a couple of great ideas. INO, OPK, COVD. This one I'm looking at. This is another spec play on the thing side, coronavirus side, is COCP. There's quite a few of these names, so I'm not an expert at following all of them. StockTwits actually covers this stuff big time. If you just type in some of these names, you just like a lot of guys are just trading this like crazy. Some guys, I'm sure, not sure who's making money or not. But here's COCP. How much does it hurt to buy a common stock at $1? The stock shot up from 50 cents up to which was the one that we had, which went from 50 cents now up to $2 in
IBO.
IBIO. So COCP is similar to that. Okay, so I would buy it at. I might buy it pre-market tomorrow. It'll probably be popping up. Even if it goes to $1.60, at 60% of my money, you buy a chunk of the common, put a stop loss in it, and go away. Nobody's asking you to put a whole book on it. But let's say somebody buys. I'm just giving an example. Somebody buys 5,000 shares at $1.40. I think that's what it's going to open up tomorrow. Or somebody buys 2,000 shares at $1.30. Put a stop loss in, not at $1. Put a stop loss in at 80 cents, and see what happens over the next couple of days, or the same day. Do you think this stock can go up back to 250? Of course it can. So here's another name, COCP, IBIO. We told people to buy it. We had a member recommendation. It was a member suggestion. He knows this stuff well. He said, buy it. I said, okay, putting it out there. I bought a chunk at 56 cents, 56 cents right here. What happened the next day? The stock goes to 340. You think you can chart these things? Yeah, you can chart it, but it's not a technical play. So I said 56 cents, big deal. So it shot up to $1.50. So I sold a bit. And then I saw it turn around that day. And I said, man, I got to buy more. So I bought more, and it jettisoned up to 340. I was mostly out between 3 and 320. 283, 320. Big gains, big gains. Then the stock falls. Bought more. Right now, you can buy the stock at 2, put a stop loss somewhere around $1.22. And if it goes, it goes. You make nice money without worrying about what's happening to the high yield market. So that's the way you hedge things. So that's basically it, guys. So to end this session, let me just put it. This is monumental what's going on. We are right now at limit. Okay? Futures has stopped trading. We're down 145. Right there at 28.19. We are at 28.19. And this is unheard of. All right? So right when the market opens, you think they're going to start buying the crap out of it? I don't know. Because mom and pop ain't trading the futures, but the institutions might say, what the hell? Let's short it more. So boom, we fall. So it's going to be one heck of a morning, guys. So in the meantime, I have my levels drawn, and I know these bounces will be very fast, very quick, and I intend to make money off it. So a lot of you don't expect me to handhold you on those fast trades. I'll put out a little bit of what I'm buying, but after that, you got to drive that frigging Bugatti Veyron, okay? Or else you're going to be in the swamps in Texas like that guy, or off the cliffs in Hawaii. So have a great week. It's going to be extremely volatile. It's an unprecedented history in the making, guys. All right. So everyone else is going to be listening to the webinar. As you know, if they ask me, Frank, did you turn like really crazy bearish? No, I didn't. I just think it's a very unnerving time right now by forces which are beyond our control, which is coronavirus, the oil war initiated by Vladimir Putin, who is destroying our shale oil industry. High yield bond market, CDS spreads are going nuts, and that'll have a ripple effect across many different industries. So we have to be very vigilant. Are we oversold? We are beyond oversold, but technicals don't matter in times like this. Are we going to fall into a recession? I hope not. But you're going to see a lot of action coming out of the central bankers and everything. So expect short-term rallies, which will be sold. And I intend to make money on it. On that note, God bless you all. Eldon, join us as a member. It'll be fantastic to have people like you. And on that note, have a great evening, gentlemen.
All right, thanks. See you.
Good night.